afternoon. I'm April Williamson with Cornerstone Wealth Advisory Group, and today we're going to be talking about something that many people have on their minds this time of year, which is gift giving. I'm here with Matthew Gouin, our life insurance specialist. Now, Matt, I heard that you have a very unique gift idea that you like to share with your clients.
Sure. If you're like me, a lot of my every year we buy our kids presents and they get thrown around and broken and in the trash can by the time next Christmas comes around. And so basically what a lot of people are doing nowadays is taking more financial approach to their grandkids and gift giving. So you can set up savings accounts for them. One really popular thing now is actually the children's whole life policy. I know I did that for my little girls when they were 4 and 6, and it's something that stays with them.
Okay, so you said it stays with them. Can you explain what that means? How does it work?
Sure. So basically every time that we make a payment into the policy itself, part of that payment goes into a cash value. So when Taylor, my youngest one, is 4, in 20 years when she's 24, she'll have a couple $1,000s of cash value inside of there, and it grows tax deferred for her.
Wow. So how would that affect her insurance rates as she grows, if you were to give them something like that at a younger age?
Sure. So basically what it is, it's on the chassis of a whole life policy. So the rates are locked in forever. So at a 4-year-old's rate for life insurance, obviously it's pretty inexpensive. And you can do anywhere from $5,000 all the way up to $30,000, and it's locked in benefit for the rest of her life.
Okay. Now, what would happen if in the future her health were to change, if the child was to be diagnosed with heart disease or diabetes?
Another great question. Well, when it comes to the whole life policies, once you do the underwriting on the front end, it's locked in forever. So if they were to come down with diabetes at the age of 50 or 60, which is very common, they actually wouldn't have to go through any kind of underwriting. It's already locked in, not just their age, but their health as well at a younger age.
Something like that, with that much value, what's the cost look like?
I know when I was a kid, I used to get a $50 savings bond from my grandparents every year, and it ends up being right around $4 to $5 a month anyways. So instead of getting those old-fashioned savings bonds that don't make anymore, you can actually pay an annual premium for about $50 and anywhere up to $100 and get 10, 15, 20,000 of whole life coverage that builds cash value, guaranteed.
Well, that does sound like a great idea for many people out there. Thank you so much for speaking with us today.
Thanks for having me.
To all of our subscribers who are watching, if this is something that you would be interested in, feel free to contact us. The information is here at the bottom of the screen, and one of our agents would be happy to meet with you to see how you can provide this for your family. Have a great day.